All right, it's mid-December. Let me take you through a quick market update for Wheaton. Give you some sense of what I look at on a daily, weekly basis. InfoSparks is a great tool that we have to kind of break down the market. We can go as deep as neighborhoods. We can create our own area if we want to just look at your street, for instance. But in this case, I'm looking at Wheaton. We can look at different price points. Here, right off the bat, I'm looking at months of supply. So this is a key indicator of whether it's a seller's market, a neutral market, or a buyer's market. We are only at 0.8 months of supply here as of November, the close of November. So basically, if there are 100 homes for sale in Wheaton, it takes 0.8 months for all of those 100 homes to turn over. That's extremely low. A neutral market would be anywhere from 4 to 5 months of inventory. So you can see we've been in a seller's market for quite a long time. There's not a great story to suggest that we're going to be coming out of that anytime soon. You can see what's going on with pricing here. This is a rolling 3 months. So kind of like more near-term trends are going to be more explicit in this type of data set with the rolling 3 months. Prices are up 9%. If you went back and looked at the rolling 12-month, obviously it's going to be a little smoother line. We're still at 5%. So if you think about that and you see where we were at the start of COVID and where home prices are now, it's fairly drastic. So the average home in Wheaton prior to COVID was $337,000. We're all the way up at $415,000. So a crazy run up, and maybe good news if you're a homeowner, maybe not so good news if you're trying to get into the market for the first time. What's interesting too is you can kind of see what's going on with price per square foot. As you can imagine, that kind of moves up as pricing moves up. And you would also see that if you had months of supply and pricing on the same graph, they would be inverted. So as supply goes lower, pricing goes up, because this is a market like every other market. Basically, if you have demand higher than supply, pricing will continue to go up. So even though interest rates are higher, that did have an impact on demand, but it didn't come down enough to level off with supply, and that's why you still see home prices going up. If you look at a national view, this is an account that I really like to look at, Altos Research, which gives you a great sense of what's going on nationally. You can see total inventory here, and you can see prior to COVID how you have these really clean cycles where you have inventory peak in midsummer, and then it drops off, and it's the lowest it'll be in January, late December, early January. And then you start seeing inventory build again throughout the spring. You can see what happened in COVID, where inventory did not bounce back up. It continued to drive lower and lower and lower due to artificially low interest rates, due to people rushing into the market before they believed that interest rates were going to go back up. And you saw this crazy drive down of inventory. We were already in a seller's market here, but it got exponentially worse during COVID. You can see that we kind of fell into roughly a normal cycle again, although right about now, you would have expected inventory to drop off a little bit more than it has. I do think you will see that kind of correct itself in December as you see a lot of inventory drop off the table. Even homes that are still wanting to sell may come off the market just so they don't have to show it during the holidays. And you'll see that hit back in the market January, February, March. Something else I look at all the time is what's on the private network. So these are homes in Wheaton that are on the private network that aren't feeding Zillow or Trulia just yet, but we can get a good sense of what's coming onto the market. And this is something that I'm looking at on a daily basis, which is really interesting. And so we're looking at this for our clients all the time to get a sense of what's coming, because again, this stuff isn't necessarily out there actively being marketed as such. So again, these are some of the metrics we're looking at. The story remains the same. The only differences between this year and maybe last year is our inventory is slightly higher. And we'll see what happens with rates as they start to trickle down a little bit. We peaked at about 8%, and we're just above 7% now. So we'll watch that closely. The belief is that for every half point rates come down, more and more people enter the marketplace. And if they do that, we can get out of this gridlock a little bit where people aren't willing to sell because the rate that they have to trade into is just too high. So hope that's helpful. And if you have any questions, as always, shoot us a message and we'd love to answer your specific questions.